what gets you really pumped up to go long a stock?
Yeah, so my favorite setups have they're all they all have something in common. This is kind of what I like to see. So you have like an initial daily spike, right? It comes down, it goes sideways. Maybe you have another daily spike, and then it kind of goes sideways even closer to that high, and just creates like this level on the monthly chart, on the weekly, on the daily chart. So it's a very key level. And then on top of that, you want some type of catalyst, whether it's going to be the marijuana stocks, whether it's going to be EV, whether it's going to be Bitcoin stocks, whatever it's going to be, because you guys see in small caps, I'm sure most of you guys are small cap or mid cap, large cap traders on this channel, but you know, when you have that world event, whether it's even the oil, you have these sympathy names. And when you have that sympathy, that's when you see the best moves. So if it has some type of big sympathy world news, and it has like this huge chart that's been developing for months, and then the last thing is volume. You want to see volume, and you want to see billion, 2 billion shares, something crazy. And that offers the best trades. And also another quick thing is you want to look at the history of the stock. What has it done in the previous, weeks, months, and seen how it's traded. If it's just something that like you see on the daily that like wicks, and the daily candles are very like, I just call those daily candles ugly, where it's like very wicky and it's kind of like all over the place. But if you have like the nice solid body candles, and everything is very solid and very visually appealing, that's usually the best trades, because I'm able to sit in it, and I understand that it's not really going to do any type of weird wiki stuff. And if it does, then I get out.
Great. Yeah. So chart, catalyst, volume, all things that you're looking for a setup that you're
Yeah.
interested in.
Yep.
Yeah. And I had a question about trade management as well, because notoriously some of the OTCs tend to be quite volatile, where you can be up, thousands in a day, could drop, 50, 60% overnight. So how do you approach trade management with the OTC names?
Yeah. So you did ask if I'm swing or intraday trade. So I'll kind of get back to that and loop that in with this question. So I do both. I intraday and I swing trade. And what I like to do is kind of have two separate positions. So when you're trading it intraday, you can size up more on it, I think, because you can get out whenever you want. And there's no pre-market, of course, no pre-market trading with OTCs. So if it's starting to gap down, you're pretty much screwed, and you have to wait till market open, and everybody's waiting for market open, and you're going to get probably a bad fill. So I do bigger size on intraday basis, and then I do like swing trading stuff, because OTCs, they have sick gap ups, and when the market's hot. So I just do that with smaller size and kind of treat it as two different positions almost.
Okay, yeah. And do you tend to scale in to your positions and scale out? Or do you tend to find that you're more like you'll take one big position and then you see how it goes, cut it or leave it?
Yeah, so it all depends on the volume, but if I'm looking at something, I'll usually at least take a starter like at the open. And then if you can kind of see on the bid, like if someone's on the bid and you're having a nice tight spread, then I'll scale into that trade. But if I just take it at the open, maybe it goes up or down a little bit and there's nobody really there, like I won't scale into that trade. I'll just take a small gain or a small loss. I'll take a trade. And if it's like it's confirming, and there's a lot of heavy buying and a lot of bid support, and there's a lot of bid soaking, then I'll scale into that trade, and then I'll also scale out of it into the pops, because it just is it's too easy not to, because you can see like on the tape, and you just don't want to overstay too much, because if you overstay, then you potentially could give all your profits back, as well as sometimes there'll be a harsh dip. So if you didn't lock any in into the spike, and there's a harsh dip below VWAP, or just a harsh dip wherever it is, and you might be tempted to sell your entire position. But if you'd locked some in, maybe you're thinking about an add into that dip instead. So I like to always lock in along the way, which gives me the ability to add and stay comfortable through the pullbacks, because I had that realized cushion.
Yeah, you had mentioned that you also swing trade some of these. Do you think about different like price target or profit target levels for your intraday and your swing trade, or do you think about those ahead of time, or do you just wait and see in the moment as things are moving, and maybe are you adjusting your swing position and your intraday position accordingly?
Yeah, so for the swing position and the intraday position, like kind of getting a target is I'll look back on the stock and see what kind of range it did when it got volume before, when it had a previous similar pattern or a previous similar ticker. I'll kind of just get an idea there, like kind of what to expect. And that helps me stay patient for that level. And with swinging stuff, like I'll usually sell a good portion into the gap up if I'm taking a swing, and then I'll just kind of rebuy if it holds. But there's a lot of action at the open, and I'd usually just take like my best trading came when I was swinging OTCs overnight, and I was gapping stuff up, and like four out of five of them, 7 out of 8 of them were gapping up. You just take that 10%, and if you've got like 5, 6, 7, 8 of them, you're starting the day up like 50%. And then you have that cushion to then scale into other intraday setups.
Kind of notoriously, OTC traders kind of get maybe a negative stigma for like viewing these stocks and their positions as lottery tickets and just waiting until they go to the moon kind of stuff.
Uh-huh.
Whereas it sounds like much more nuanced in terms of where you're actually taking profits and not viewing these just as like lottery tickets or maybe gambling that it's going to go to some astronomical number. So could you maybe talk about like the importance of viewing these as maybe like trades and where to take profits versus holding forever and maybe being able to separate yourself from the other types of OTC traders who might be losing money?
Yeah, I'd say a lot of people think that if they're buying like a sub penny stock or a penny stock or a 2 cent stock or whatever it is, they kind of like think in their head, like, oh, what if this goes to 10? What if this goes to 20 cents, 30 cents, a dollar? And they get these unrealistic expectations that you're trying to catch the next, HKD or whatever it is. That's a NASDAQ stock, but of course, um, and for me, it's just I'm going to trade the price action while the volume's there, and I'm going to trade it like I would trade a small cap or whatever it's going to be. And I'm going to lock in along the way. I'm going to take my profits. And if it keeps going up, sure, I'll keep like trading it in and out as long as there's volume there in range. But once that volume and range goes away, I'm not going to sit there holding a bag thinking that this is going to hold and go higher. And I think that a lot of people just have like these unrealistic expectations on OTCs, which they do insane moves, but it's very hard to capitalize on that move. And if you just trade it and take your profits, it's going to add up to the same amount, if not more, than getting lucky one time on a 20,000% mover.